This one stock in a booming sector has crazy potential for 2026. MarketBeat's Thomas Hughes is here for a deep dive into this one stock and the sector it's in. Thomas, before we get into the details of the stock, let's just talk about why you're so bullish on this stock.
This stock in particular is lagging its peers, it's lagging its industry, which is cybersecurity. It's a pretty hot market. I would expect to see this particular stock be doing better. It is certainly set up to have a very robust year ahead.
Well, we're going to get into all of those details for our viewers. This is a new format for us. We're going to try a deep dive into just one company, and we'll tell you all about the company and tell you the name, but we're going to wait till the end of the video to reveal which company it is. We'll see how long it takes before you can guess which stock we might be talking about. But let's get into the cybersecurity field a little bit. We know this is a stock in cybersecurity. What are analysts expecting to see in the cybersecurity sector this year?
Well, the cybersecurity sector is growing. It's growing at a pretty sustained low double-digit to mid-teens compound annual growth rate. It's expected to sustain that for 10 years, 15 years, perhaps indefinitely because of the growing need for cybersecurity. Right now, the world is becoming increasingly digitized, so more people and more businesses are using it. We've got an increasing penetration of services for those who are using it. The pace of attacks is increasing, and the scale and the cost of those attacks are increasing. Right now, the average cost to mitigate a cybersecurity threat attack is about $4.4 million. That varies by industry, with some industries reaching into the hundreds of millions of dollars. And with AI on the table right now, the value of the data that needs to be secured is only growing daily.
Such a great point that there's so much investment happening in AI. There's so much data in the AI world that the idea of protecting that data is so important right now. Let's talk more about the investment happening into AI and this company and the many other companies in the space.
With AI, we bring in this phenomenon called cross-cloud operation. Businesses today do not rely on one cloud provider, one cloud network, one app, one platform. They're using multiple providers, multiple platforms. They need to be able to secure their operations across this diverse and growing environment, which is very, very difficult.
Yeah, and I know we've talked about cybersecurity a few times on the show, and you have said that cybersecurity doesn't have just one winner or one major player. And we can talk specifically about some of those names that we are seeing as leaders in the field. But I know one thing you've talked about a lot with cybersecurity is that this whole sector is really fragmented.
It is pretty fractured. There's lots of players. The largest operators only have a low single-digit market share. So there's plenty of room for disruption. There's room for acquisitions or mergers, and there's room for growth. The companies that are leading, and the one that we're talking about today is one of these companies, provides a unified platform that is able to provide security seamlessly across all these different environments.
Sounds like something that there would be a lot of demand for, but we're not seeing that in the stock right now. Let's talk about the slowing growth for this company.
Well, right. So there have been concerns about slowing growth over the past few years. And to be fair, growth slowed, but it's still sustaining a high 20% growth rate. It's expected to sustain 20% growth in the coming year and probably in the year after, if not still a very high teens growth pace, which is good. It's a good, solid, healthy growth pace. Certainly demands a premium. It qualifies as a fast-growing tech stock. And to me, that tells me that the stock price where it is now is just an undeserved location.
Yeah, 20% growth year over year does compound into a significant growth story. I don't know if this would be the fastest growth story to talk about, but there is a lot of growth here, especially with where the price is right now. And that is why we are talking about this stock today as one of the potential game changers for investors in 2026. If you're looking for other growth stocks out there, though, that are maybe even larger growth stories ahead, make sure to check out this free premium article. It's brand new, and it's just for our YouTube viewers to look at for free today. This is the next market leaders, 5 growth stocks to watch in 2026. These are some smaller names with huge potential. Again, that article just came out, and you can look at that list for free today by following the link in the description or scanning the QR code on the screen now. All right, Thomas, let's get back to this one cybersecurity stock that could be a huge game changer in 2026. We addressed the slowing growth concerns, but it also puts the stock down at kind of a desirable range right now, right?
Yes and no. So Part of the concerns with the slowing growth is the valuation. Right now, we're trading about 80 times the current year's earnings, which is wicked high. It's about 4 times the S&P. It's high for a premium on any growth tech stock. However, we are pricing in a very robust long-term outlook for this company based on the forecast as they are today. The stock is trading at under 5 times its 2035 earnings. So assuming that it is able to follow through on its growth, and the most recent earnings report have affirmed that with outperformance and pretty decent guidance, this company could rise by 4 times, 5 times, 6 times in value over the coming years to align with industry peers, the S&P 500, other premium tech growth stocks. So there really is a deep value opportunity present.
That's assuming all of those conditions are correct and work as planned. I think that's the key point here. We're talking about 20% sequential growth for this company as an expectation. But what will it take for that to actually come to fruition? What would we have to see to know that that projection is actually working for this company?
Well, right now we have a growing pipeline of business and growing ARR and RPOs. A development within the last few weeks is the company was approved for a high impact level GovRAMP authorization. And what that does is open the door to high security government contracts, which it has not had access to before, which greatly opens its addressable market and its potential for growth in the coming year.
We're going to get into what analysts have to say about this company in just a minute. But first, I want to talk about some other specific names in the cybersecurity field and how this company stacks up against those competitors who are already getting those government contracts. What would help this company secure some of those government contracts above some of the other popular names in cybersecurity?
Well, two of the competitors that stand out are CrowdStrike and Palo Alto Networks. They each have a slightly differentiated approach to cybersecurity and what they're offering. They both offer some similarities and some differences compared to the stock we're talking about today. The primary similarity is that unified platform where they're providing unified security across cloud environments, across endpoints, across IDs, just trying to get that full, comprehensive security in a single location.
All right, that could be a good hint for some viewers who might be trying to guess at which cybersecurity company we're talking about today. Let's get into what analysts are saying about this company.
So the analyst sentiment trends certainly had an impact on the stock price last year. So we had a little bit of sentiment rating reduction and some price target reductions, but this market has overran. It's moved too low compared to what the analysts were saying. The trends right now, they still rate the stock as a strong moderate buy. We're still looking at potentially a 55% upside at the consensus. And the really significant factor is towards the end of last year, the trend kind of shifted. Instead of reducing price targets, we started seeing some reaffirmed price targets, which kind of ends that downward pressure and sets the market up for a rebound. So what we're looking for now would be a catalyst to spark some upgrades and some price target increases, which I see coming in the upcoming earnings reports.
What are you looking for specifically in those earnings report to signal there might be a turnaround in the stock that has struggled for a while?
Well, I think right now, merely being able to sustain that 20% pace would go a long way. But I think if we see strength, outperformance, and potential for reacceleration, this market could really take off like a rocket.
Yeah, there's a lot of stipulations there that have to happen for that to happen. But you'll present more of your bullish case on this company and which stock it is coming up in just a minute. We have a few other things to talk about first with this one. One of those things are what the institutions are doing with this stock. It seems like they are getting some institutional attention right now.
The institutional group owns more than 90% of this stock. That is a significant amount. They have a powerful impact on the stock price, and they were accumulating all throughout the past year. So you can see that in the stock price action. There's certainly a bottom is in play. We're trading near that bottom right now. And like with the analysts, institutional activity has turned even more bullish as 2026 has begun. So the data for the first week, 10 days of the year shows institutional activity accelerating, which to me shows a bottom in place, sets the market up to rebound. It's just a matter of when it starts to do it.
Yeah, and that when it starts to do it really comes down to the differentiators for this company. Any of that future growth, any of this turnaround that we see really is going to have to do with how well this company has really set its product apart from other cybersecurity leaders and how well they're marketing that and really making this company be a little bit more profitable in 2026. So let's talk about what sets this cybersecurity company apart from those other names we've already mentioned.
So this company has developed an AI-powered platform securing endpoints, IDs and clouds across cloud instances, and they provide an autonomous response and mitigation. So this platform is actively looking for threats before they happen, trying to stop them before they do. And then once they do happen and are detected, mitigation starts almost immediately. It helps to reduce the time to remediate and the cost to remediate these problems. And it is really been resonating amongst clients.
Well, if you haven't guessed what stock this is yet, I think it'll help investors out there to hear what the name is and also to know just how bullish you are on this stock having a big turnaround in 2026.
The stock is Sentinel One, and I am pretty bullish on it. It is a deep value. It's got solid growth. It's got solid profitability. It's got a good outlook. It has a high potential to accelerate its growth in the coming year. And with analysts and institutions accumulating, it looks like the rebound could reach into the double digits, if not into the low triple digits.
It's a big outlook for this company, but there's also a lot of investment happening in cybersecurity right now. And you can catch more of an inside conversation of the investment happening at the federal level into cybersecurity. In this video, we had with a senator who came on the channel to talk specifically about cybersecurity. Make sure to watch that video here.